moratorium didn't before it went away. But I'm wondering, how is this impacting the way that you invest or the way that you look at things? A couple of the quick statistics before you jump in is the moratorium is extended to October 3rd. And I took notes because I'm making a video on this with Michael Zuber from One Rental at a Time later today. And those notes are at work and I'm recording at home now. So I'm probably going to get some of these numbers wrong. But 48 million rentals in the country, less than 6 million people are behind on rent. And in an average year, those numbers track to about what we normally see. We're not much more people late on rent than normal. And so the moratorium ending wasn't going to impact me in any way. I personally, in the last 10 years, have never had one late or missing rent payment. And 2020 was no different. I had 1 month where I offered $200 across the board off in April of 2020 because everybody's stress level was so high. I offered all of my tenants, let's just take $200 off and see what happens. Half of my tenants said, no, thanks. We're working. There's no change, and paid the regular amount. Half the tenants took advantage of that. I don't know anybody in real life who has any tenants that aren't paying. Michael Zuber has 180 units. And out of all of those, he has one tenant that's been playing games the whole time. And he's finally going to be able to evict them. But that's a really small percentage. So of the people here today, is there anybody that's going to be making any big changes based on the moratorium being extended? No, I see Alex laughing. Go ahead, Alex.
Let's see. I'm not making changes to my personal portfolio, but I'm maybe looking to buy from any investors that are now distressed because of this. So, if you don't have the cash reserves to be able to handle this, I'd be happy to step in and maybe see if I can make an offer. That's about the change.
The thing that I like about that, Alex, is in the lending world, you're working with a lot of different investors, and you kind of see the bigger scope. And in that, your goal is to acquire more properties. You don't see this as, the sky is falling, we need to get out of real estate. And the few cases where I think smaller, mom and pop type landlords are going to be getting out because of the frustration, that's going to be a really small number of people doing that, but they're going to get all of the press. They're going to ones that get, all the stories on the news networks, all the YouTube clickbait channels are going to be able to say that this is what's happening everywhere. So I don't see that being a very big thing.
Yeah, and the thing is, in all the major metro areas of the U.S., I can't think of a single one that in the past 12 months hasn't seen some pretty significant increases in value. And so anyone that gets into any kind of financial distress because their tenant isn't paying rent, they have the option to sell, and they should be able to still sell with, and get some equity out of it. So, it kind of sucks to lose your property if that's what ends up happening. But, at the very least, you should be able to do a cash out refinance or something to tide you over until, you can kick the tenants out. I would be incredibly surprised if, there's a wave of evictions or foreclosures because of this. That would be the shock of a lifetime for me.
Well, one of the things that I'm saying, you mentioned that the value of properties has gone up. So we're not going to see a lot of foreclosures because the people that would be in that situation would have equity to sell. But I don't want to grab my phone and pull up a picture and hold it up. But I shared an image earlier today on social media of the massive rent increases in the major markets too. It's 13 to 18% pretty much across the board. And even here in Washington State, I had a rental unit that was at 1130 and I was below market a little bit. And I thought I would get 15 or 1600, and I had it rented out at 1800 with 12 applicants within 4 hours. So rents have gone up significantly too. So I don't know why so many people are saying that the eviction moratorium ending is going to cause a lot of owners to sell. That there's just not going to be a flood. What are you seeing, Troy?
I think that I've got, non-paying tenants, but I don't think it's got anything to do with the COVID. I think they're just, low-income people. I don't predict that we're going to see any massive wave of foreclosures, like you said. the help is out there. There's forbearance that you could have gone into. You can sell. You could have refinanced if you still have a job. And now most states, you're getting to a point where you can get, the landlord can apply for any lost rents. So it's all, the internet's just blazing up. Everyone's freaking angry and upset and throwing shit everywhere. And oh my God, how can the government do this to us? I'm like, dudes, has it materially affected you? No. So why do you have a stick up your ass about this? Who cares? You look like a good person if you say, God, that sucks. This whole world sucks right now. I'm glad that the government is taking an opportunity to help those who need the help the most. Now, I understand there's some investors who are having trouble. They're just not looking at the whole picture to see how they can solve those problems. They're just pissed off with the government stepping in and stopping them from transacting. It's illegal for the federal government to make changes to your contracts, and the government has nothing to do with the legal contract between me and my tenant. Property rights bullshit. It just pisses me off, and I'm sorry, I'm a little lit. I know not everyone agrees with me, but I've been in constant. I'm just shutting down a battle on the internet right now about it. So it's just dumb, as far as I'm concerned. Yeah.
No, I I want to make some kind of joke about not usually agreeing with you, but I usually do. And in this case, I do too. And I wish I had my notes, because there were I might get this number a little bit off, but there were $45 billion set aside with the CARES Act for rent relief for people to apply for. And a lot of states mismanaged it because only 3 billion of that has been put out. But that change that you mentioned is the big one right now, because the problem a few months ago was the tenant and the landlord had to apply. And now we're seeing cases where the landlord can just submit for it. I had a tenant put in for it, and I had 2 months were covered ahead of time. I was receiving rent regularly, and then all of a sudden in November, I got an extra check for December and January for a tenant. They were just as shocked as I was because they had requested it. So, and then I have 2 questions for Mariska. First, can you tell me a little bit about yourself, your portfolio, how you invest, or how you get into the mastermind? Because I haven't heard you talk. And then, do you think the eviction moratorium being extended is going to cause any big changes?
Wow, that's a lot of things. Okay.
Spotlight.
Like some of you, I focus on creative real estate strategies. I'm somewhat agnostic as far as what they are and what the collateral might be, because I also do, I'll buy business notes and other things as well. So for a number of years, like right after the last housing crisis, we were doing a lot of lease options. Would still love to be doing those, but it's just not the right market for it. So for the last several years, we've primarily been doing notes. And so we buy notes, primarily performing notes. I know a lot of people get excited about the non-performing, and that's great, but we primarily like the cash flow. And so we will buy notes and hold those for cash flow. And sometimes we sell those to other investors who would like to have passive cash flow. And so I do have a couple of rentals still as well, but I sold one a couple months ago, and I'm in the process of selling another one now, and blah, blah, blah. Anyway, to your question, as far as what I see happening, when the COVID, lockdowns and all of that first started, I was very concerned about my borrowers because well, I just was. And so I wanted to, so I reached out to my servicing companies and I said, please stay in contact with the borrowers if they need anything, even though I'm not subject to some of the regulations about requiring forbearance and all of that. I wanted to be very sensitive to, what their situation might be. And so I said, be sure to, happy to offer forbearance, happy to do loan modifications if that makes sense. We just want to work with them and make sure. Well, lo and behold, we didn't have a single person fall behind. And in fact, I had a guy who had a rolling 60-day late who, because of the increased contact, he brought his note current. So, and I found that to be the case with other note investors that I network with across the country, that for the most, and we're primarily talking about small balance notes, notes that are under like 120,000. And so I think my theory on this is that, with, if they were unemployed, with the federal, additional federal unemployment, they were probably actually making more money than they were before. And so the mortgage payment became, quite easy. Regarding my rentals, kind of did the same thing, reached out to them. I have a few people who are self-employed and they all just basically said, yeah, we're good, thanks. I directed them to the PPP loans and the EIDL loans if they needed them. And, but I personally haven't had any issues. Having said that, I do think that there will be a wave of non-performing notes coming. I think that there is a shadow inventory. I think that not all, a lot of times what we're hearing are things from the GSEs, and there's other types of loans that are out there. Will it be as bad as 2008? Probably not. But will there be definitely a shift? Yeah, I think so. And I think that there's a lot of people who are in the rental space who perhaps didn't either have the right properties, have the right capital structure, know how to screen their tenants appropriately. I think that there are and will continue to be a lot of really burned out landlords, and that will provide opportunity. And I'm happy as well to buy those properties. I also can provide some resources if they are concerned about capital gains, and or if they need to have the continued income, but they just don't want to have the hassle of owning rentals. So that's me.
Cool. Has Julie and Joe had you on for a full episode?
Yeah.
Where you cover notes? Can I get the number of what number that was?
God. I'll look it up and put it in the chat. And Joe, are you on that already? It looks like you're nodding. So maybe I have it somewhere, but I off the top of my head, I don't know.
That would be awesome, because I've heard people talk about notes a little bit. I think Troy had some that he was talking about one time. And I know this much about it, and everything you just said was fascinating. So,
well, and
awesome.
If anyone's interested, by the way, and I know not everybody is, and not everybody, would want to make the trek down there, but one of the biggest note events in the country is Note Expo. And that will be happening, let me look at the dates. It's the end of October, I believe. Yeah. Oh, no, I'm sorry. 1st of November, November 4th through the 6th, Note Expo. So you can, I think, just go to noteexpo.com. And if you're interested in something like that, it's just it's a trade show, it's training, it's education, it's networking, and people who are doing all different kinds of things with notes. And so there's, just like there's thousands of ways to make money in real estate, there's a whole lot of ways to make money in notes as well. So.
That's the one in Vegas.
No, this is the one in Dallas.
Okay. And then if I can move on to Johanna. Johanna. I'm sorry, since we don't have Julie here today, I'm actually just going to get the chance to reach out to a couple of people that I've seen on here a couple of times, but haven't really got your story. Can you tell me, what do you invest in? What's your focus? And since today I'm trying to figure out the moratorium, has it impacted you, or do you think it's going to impact you?
Gotcha. So I am, I'm an investor in primarily single family, and it's with a, our family trust. And so we've got units in Washington, Oregon, and California. Primarily, we do it for the cash flow. As we're kind of spread out, we have people who manage it for us in some locations and some not. And other than that, we haven't had any issue, but then we also own in fairly high-end areas. So our tenants have not had challenges with the rent. So we're not seeing that issue or not anticipating it. We are, though, thinking of basically selling off, doing a 1031 exchange and getting more into the multifamily or larger buildings. So that's something we're all considering. And I'm also a real estate broker with EXP, working with Mariska and Julie.
Okay. One of the things that both of you kind of pointed out is you haven't had people impacted by COVID. And the really cool thing with this current extension is up until it expired, you didn't have there was no onus to prove you were impacted. You could just say, I don't want to pay my rent. And there was no eviction. With this extension, it's supposed to be only impacting counties where there's a higher COVID percentage, and you have to prove that you were financially impacted by the virus. So there were people who were working or people who were making more money on unemployment with the extra money that were just not paying their rent. And again, those few got all of the news. I'm curious. Thank you, Johanna. Jai, I haven't heard you talk much about the moratorium. Have you had anybody not paying, and do you think it being extended has any impact on the way you're going to invest?
Yeah, so I mean, definitely on the way I would invest, just from the base that if there's, more properties on the market and there's more buying opportunities. As far as like with COVID, touch wood, because all like 20 something of the tenants that I have are students. And even though there wasn't in-class operations last year, most of them were, they were signed off by their parents or through financial aid and stuff like that. So it was like I was getting monthly checks. So luckily I did not have any issues.
Yeah, so that's weird with the colleges not having people attend in person. I expected a lot of people to have trouble with that. But so how did that look? Did people who just weren't even in that town continue to rent to hold the spot, or did you have vacancies? What did it look like?
No. I think one thing we got to realize also is like I was really worried about that as well. Like I was like, on the school's website, like checking for updates every single day. Wait, can you guys hear me? Okay. But I think what it was is like, kids still want to leave their house, right? They still wanted to move out of their parents' house. They still wanted to have their freedoms. Like, even though they were studying at home, like our utility bills, because we always include utilities in our rent, just so it's easier with students. Our utility bills went up through the roof. We didn't increase the rents because I was just kind of glad that, everything was rented out. And we do these pre-leases about 4 or 5 months in advance. But yeah, it was just, I think students, like talking to the students, and it was just all about them wanting to leave. Like I think some landlords definitely had issues with students wanting to move back home and save money. But luckily, where we invest, that wasn't the case.
That's kind of the theme I'm seeing with most of the investors that I talk to, and I try to talk with as many as I can. Most of them say, I haven't been impacted. The people I know really haven't been impacted, but I do know this one person who kind of sort of had this, right? But again,
what's strange is like, I know that Joanna was talking about like her tenants are typically in higher end neighborhoods and she hasn't had any problems. But like my neighbor in Lashai, like has a tenant that's working at like, I think, he's renting it out for like $4,200 a month or something like that to a couple. And they never lost their job because they're both in tech and they're working from home, and they just didn't pay. They haven't paid for a full year, and they can't apply for those benefits because they can't show that they haven't been working. Like they have their jobs, they're doing everything. Like, so yeah.
That's what I'm hoping the change that Troy was talking about will have an impact, where the landlord receiving the money is really the end effect, not so much what's going on with the tenant.
Yeah.
And
Cool.
one of our units is a house that is in a student that we rent out to students. It again, high end, it's by a private university, but even last year the school was closed and the students still showed up because even though they were going to be quote remote, they wanted to still have a college experience or something like that. So we didn't lose those renters even, and we kind of were worried about that particular house.
That
Yeah.
is awesome. And I'm going to steal both of you saying that, and that'll be in a YouTube video in the future. So thanks for that. Are you here today, Holly? I see you logged in. I'm curious, how's the moratorium affecting you?
Yes, I'm here. Hi. The moratorium, luckily, I have a couple rentals. Luckily, it hasn't affected us. I used to do property management, so I had that and knew how to screen tenants. So I think that really helped to save us. A couple of our tenants are government employees, and one is a housing authority. So luckily we don't have any issues right now.
Okay. I think tenant screening is key. And, you know, Johanna, you have the high-end properties. Mine are all Class C. My mentality was, if there was ever an economic downturn, there would be more Class C tenants because A or B can move down. C would rarely move to a war zone to get out of there. But with the pandemic, it really kind of didn't matter. Nobody was moving to avoid the problem. Just not paying was the problem. And so for me, tenant screening has always come down to credit score above everything else, because I'm in Class C, and I won't take anybody with lower than a 700 credit score. And I usually, if that ever comes up in the comments on any social media thread, I get attacked. Of anybody with a credit score like that is going to want to buy a house. Why would they rent? But when I list a property and that's my criteria, I have, like my last rental, 12 applicants qualified within 4 hours. There are plenty of tenants, at least here around Tacoma and Olympia, where people are looking that have that, and nobody that's worked to get their credit score that high is going to let it be impacted. At least I haven't ran into them. And I never did property management. My first year as a landlord, I didn't screen tenants at all. I literally, no lease, handshake, put them in the house, lost every penny for the next year straight. And so I took the time to educate myself and go on forums and find people like Holly that had worked as property management and find out how people actually did that.
And
I think that
Dion,
actually,
I would
go ahead.
say, I would say that that's a huge key in what I do too. I don't accept anyone with a lower than a 700 credit score. We did one time and took a house, like it was a housing voucher as well. They had like a 500 something credit score. They vanished after 4 months and left everything in their unit. So yeah,
Right.
that's
So I
one
think,
of our key factors now.
yeah, it comes down to when you set the bar, if you have no applicants, the bar moves. But if you set the bar and you have the applicants, it stays where it's at. And one of the things that I think that the people who are renters are not going to appreciate is the eviction moratorium and the extension of the moratorium and the overreach of government, or the proper reach of government, whichever side you're on, is going to make rents go up. It's going to make tenant screening criteria get tighter, higher credit scores, no evictions, no all of the things that landlords are going to put in place to try to protect themselves from people who either disappear or just don't pay, which, if I was still a renter, I wouldn't be looking forward to next year. I mean, the rents are going up now, like we said, in the major cities, above 10% across the board, and that's going to continue. So,
May I add something on that, by the way?
yes.
Because yeah, tenant qualification is like a big love of mine. And I think, you mentioned that a lot of people say, well, why don't they just go out and buy if they've got a 700 score? Well, one thing that most people don't understand, unless perhaps they're mortgage lenders, is that even though interest rates are at historic lows, credit availability is not at historic highs. In fact, I mean, it took a big nosedive, a few years ago, and we are only now back to about 2014 levels. I mean, that was actually a couple months ago, so maybe it's expanded more. I haven't actually looked because I haven't made a presentation lately, but
no, it hasn't.
It hasn't. Okay. So credit availability is still quite low. And so there's people who are self-employed, new on the job, new to the area, all these different things. And so though that can make it really, really challenging for people to get access to funding, or they just don't have, a down payment. And yeah, there's all kinds of programs for, 3.5% down, 5% down, whatever. But, some people want to do that 20% down. And then the other thing I would say is having a background in mortgage lending. I actually used to originate loans back in the 90s. I know how to read a credit report. So I personally don't get as wrapped around the axle with a 700 credit score, because I can look at somebody with a 640 and I go, you know what, if you took care of this and this, and I mean, there's simple things, your score would shoot up. And they do it, and it happens. So, but not everybody knows that and knows how to read a credit score or a credit report. So, I get that. I think you have to have your guidelines, and if 700 is your guideline, then so be it. But anyway, that's my 2 cents.
Well, I usually say 700 is the credit score, but I mean, I look at credit history, and there are the one-offs where I've got a former Marine working at the post office that has like I think it's like a 640. It was really close to that. But with everything else, the history proved that it was okay.
Yeah.
And one of the things that people usually miss about why don't people buy if they have a high credit score is I have Section 8 tenants that have an 830 credit score, but they're never
going to buy.
Fixed income going to have down payment, money to fix a roof or water heater or foundation, or want to even bother with that when they can just call a landlord. But I see you popped in here, Keith, so I would appreciate it if you could tell me, has the eviction moratorium impacted your portfolio, how you invest, or the extension of it impacted the way you're going to invest in the next few months?
You guys may have hit on it. If you put 2 and 2 together with the eviction moratoriums that are in place in a lot of major metropolitan areas, this means you can't evict until 2022, right? Because the winter eviction moratoriums in the major cities now extend that out to March, and you just in essence totally screwed a landlord for having any chance of evicting somebody that they've had on the books through the whole pandemic. Any chance that they had was in October. Now they're toast. It's not changing my approach to it, because I'm taking a completely different approach as far as who I rent to. I do probation housing and that kind of stuff. So I'm renting straight to DSHS. So it doesn't impact me. It does impact my clients, and my clients who are looking to continue to buy multifamily and investment properties, to the extent that we're still underwriting and we're asking you guys to prove as landlords that you're actually receiving rent in the most recent 3 months. Because if you aren't getting rent in the most recent 3 months, you aren't being able to offset your mortgage payment with your rental income. Regardless what 2020 looks like, regardless what your tax returns look like, if you're not currently receiving rent for the most recent 3 months, you're not going to be able to offset that. So it has hamstringed a few of my buyers because they don't have the rental income to offset the mortgage payment. So they have to take that whole PITI payment into their debt to income ratio, and it disqualifies them. So to that extent, it's not a good thing.
How would that qualification look if somebody used the new program that Troy was talking about, where currently they're coming out with programs where the landlord can apply for rental assistance, from the funds from the CARES Act, without needing the tenant to prove they were harmed and get the payment to come in? If they're getting rent relief, does that count as rental income?
If they're getting rent relief, yeah, that would count as rental income, but typically that rent relief is not 100% of the rent roll. Right. So we would then, instead of taking historical 2020 and 2019 numbers, we're going to give you what the smaller rent portion is. So I haven't seen anybody get 100% coverage on those programs. So long as you can still qualify at the lesser rent offset, then you're fine. It's just, the other thing that I've noticed is across the board is that reserves are starting to become a very, very important part of your underwrite. So both on the non-owner occupied and on the owner occupied, especially in the jumbo market, all the jumbo markets are asking for more reserves now. So just keep that in mind.
So more reserves, like more than 12 months, Keith, or?
Yeah, up to, but not limited to 2 years worth of reserves.
Wow. Okay.
Right. So yeah. So that's money in the bank after closing.
So Keith, what you're saying is that,
Alex.
So Keith, what you're saying is that my company should be receiving some more business then, right? Because we don't care about care about TTI.
Yeah. But are you doing owner occupied properties?
That's a good point.
So yeah, it's a little sticky out there.
Hey, complete segue question for selfish reasons. If a person was looking at a fourplex, but one of the units was commercial and the other three were residential, can the VA loan be used for that?
No, it's got
No.
commercial exposure.
So it can't be mixed use. It has to be, all four have to be residential. All right.
Correct.
That
Yep.
sucks. Okay.
That sucks.
Thanks.
Yeah. You're welcome.
Yeah. No, I needed the information. Thanks. I know not to look at that place now.
Yeah.
Um,
Well, that's part of my job, delivering the bad news.
Mhm.
I had one of my favorite ones last week. I had a client that was pre-approved for a single family residence, owner occupied, and I get the purchase and sale and I'm going to disclose it. And I looked up on county record, the house that they got under contract was a duplex. I'm like, this isn't going to work. Doesn't work. So yeah, they were doing owner occupied 5% down on a new single family, and we're using rent to offset their departing residents. And so they're like, well, you could just flip it to FHA. FHA is fine. FHA has a really cool little caveat, you guys, that says if you want to use departing residents' income as far as rental income offset, you have to be moving 100 miles away. They were moving from Marysville to Everett. So hashtag not 100 miles away. So
that's good
I'm like,
information to have. I mean,
yeah.
I have a lot of people that say that they say, well, you know, because I did a 5% down conventional duplex in 2013 when lenders were doing weird things, and then lending fear went up and criteria went up. So people just say, well, switch to FHA because it's only 3.5 no matter which one you're going for.
Right.
But the 100 mile rule thing kicks in.
Yeah. If you could service both mortgages without needing the offset of rent, then go for it. Totally. They needed the offset.
Yep.
So
I didn't touch on everybody. If I didn't get to you, it's not because I'm ignoring you, but it's because I want to stick to the timeline. At this point in time, Julie usually reaches out and says, is there any topic somebody would like to bring up or something they're having a problem with while we have the mastermind together? This is your opportunity to do that. So if there's anybody that has anything that they would like to discuss, I don't know how you raise your hand with this thing, but there's probably a way to do that.
So I have a question. So the moratorium expired on the 31st, but then they reinstated it. So for those that had received the rent raises in between that time, do those still stick? I haven't had a chance to follow up on that.
So I'm going to give an investor's opinion, and then people with an actual brain and experience in the industry can answer. Yes, because the extension of the moratorium doesn't hit everywhere. Technically, it only impacts your ability to evict if you're in a county that has a higher COVID infection rate and the person can prove financial impact from COVID. So to me, I'll have to look through the 19 pages again, but that's a great question. I don't think the extension stops rent increases. It just stops evictions. But people with a brain, this is your chance to step in and tell me I'm wrong. I think whoever had their connection lost. Yeah, so no, I think rent increases, I just did one last week, but I extend 90 days whenever I do a rent increase with the tenant. So it doesn't actually change now till November. But yeah, so if anybody else has a better answer.
No. Thanks.
Cool.
I think Debbie has her hand raised. Deb Star?
Oh,
yep, Deb Star does.
okay.
Yeah,
See, there is a way to raise a hand. Awesome. Not a tech guy.
Yeah.
So please go ahead, share.
Just back to the question of the rent increase. I think RHA in Washington, or if whatever state you're in, has good resources on all of that information. So I would check out RHA to get the valid truth. And then I had asked Julie if I could introduce someone to the meeting, to the group, because I work with a company called National Water Service. They're out of Spokane, and I've had their service on all of my rental properties for several years, just for the mere fact of if there's a sewer problem at my rental property, I don't want to have to deal with it myself. So I found this company through RHA years ago, and they cover you for all kinds of sewer related issues on properties in the state of Washington. I'm not sure if they go outside the state, but Conrad who is the local rep for Washington. He's on the call here as well. And I wanted to see if Conrad is able to introduce himself and just share a minute of what he's got to offer.
I would like that a lot. I have a place in Tumwater, a triplex, where I've been dealing with septic for literally coming up on 2 weeks. So please introduce yourself, Conrad.
Yeah, hi everyone. My name's Conrad. Thanks for having me. I've learned a lot this call off. I'm not a rental owner, but maybe someday I will be. I do have a good product for folks like you who own rental properties, either single family homes or big apartment buildings. We do everything. And like Debbie was saying, we take care of sewer and water line issues. If those water lines or sewer lines collapse, if they leak, if they need repaired in general, that's what we're here for. You might be surprised that your homeowner policy doesn't take care of repairs and issues like that. And obviously landlords like you that are busy don't want to be taking care of them, especially calling a plumber at midnight and dealing with a frantic tenant with a large bill. So, that's what we do. It's starts at $5 a month to take care of the sewer and water lines. It's pretty reasonable. Maybe you can even add it into the rent. I'm not sure how that works, but 24/7, if you need any sort of sewer water line repair, that's what we'll do for you, and we'll be able to get somebody out to the property in just a couple of hours. And we are in Washington, Idaho, and Oregon. So if any of you are ever interested in maybe signing up some of your older rental homes, I'd be more than happy to help you out or answer any questions.
Can you drop your contact info in the chat?
Sure.
It's all being recorded so people can come back to it later if they need to.
That sounds great. I'll do that.
And then you said sewer and water. That means septic, sewer, and water? Like septic systems?
Yes.
Too?
Yep. We'll take care of the sewer line leading to the septic tank. We'll take care of the main water line outside the home, or we take care of inside lines as well, behind the walls and ceilings. We do everything.
Okay. So it's like an ongoing maintenance contract that you're setting up for the $5 a month?
In a way. So anytime there's a repair that needs to be taken place, if the tenant calls and says their drain's backing up, or they have a leak, in the yard or behind a wall, we'll be able to take care of the repair. We have $10,000 of annual coverage for each line, and so you'll be more than protected.
Okay, and then deductible. Each line, does that mean if somebody owns like a 10-unit apartment complex, it's $5 per unit?
Yes.
Okay.
Yep.
Fair enough.
And
Cool.
That would have saved me about $6,000 several years ago, but anyway.
It would have saved me $4,000 in the last 8 days.
Yep.
So is the $5 for tapping into the service, or does that $5 per line cover the actual service?
So it depends on which policy you would like. If you owned a triplex or larger, our rates are flat across Washington, and it's $5.60 a month per unit. So if you owned a fourplex, it'd be about $20, and that would be it. We would issue the policy, and anytime you have an issue, that's what we'd be able to take care of.
Is that the same in Idaho?
We're working on opening up the policy in Idaho and Oregon. We're filing it right now with the states, so that should be available by January, hopefully.
But I'm so confused. So for $5 a month, if there's some sort of drain issue, your guys' company goes out and fixes it?
Yeah, that's basically it. If you wanted to put in concise terms. So if there was a sewer backup, or if the sewer line collapsed at older homes, which is becoming more and more common, or the water line acts up and leaks, we'd be able to repair it or replace it. We'd be able to dig up the yard and replace the driveway, whatever we need to do to repair it.
Is there like a limit to what the charges are? Like, say if it's like a easy fix, I get it with the membership, but what if it's like a $5,000 sewer line or whatever it is?
Our coverage takes care of $10,000 of coverage every year, so that resets on your renewal date. And so $10,000 would go for your water line, and $10,000 would go for your sewer line.
And that's $10,000 per unit, or for that property?
For the property.
Okay, so if I had a triplex and I was paying 15 a month, I have a $10,000 limit for that property.
Yes, that's right.
Okay. And so in your info that you link in the chat, is there a website? How long have you been in business? Are there reviews, that kind of stuff?
Yeah, of course. Yep, we've been in business since 2010. We're partnered with AAA Washington and AAA Idaho and Oregon. That's our main marketing focus. We take care of single family homes, and we insure about 10,000 homes in Seattle right now. We're working on getting more into the rental industry. It's no different. The claims process would be the same, but it is ideal for renter or landlords like you that don't want to be taking care of this kind of thing at 1 a.m, right?
Okay, cool. I want to thanks Debbie for.
Yeah, I would just like to share that their service is remarkable. If you do have an issue and you call them, they typically call you back within an hour. They go over the problem, and then they will send their service provider out, plumber, who will come that same day typically. So it's, there's really little downtime, and this is the kind of issue that you need immediate help with, and they're very reliable, and I've had really great success with them on several issues I've had in the past.
So are you guys hiring like third-party plumbing companies or sewer companies, or is it within your own operations?
They wouldn't be a part of National Water. They would be, like you said, third party, but they'd be
Okay.
we've been working with for years and years, and we have close relations too.
You guys are just a specialized insurance company, right?
Yes.
Yeah. It's just an insurance policy.
Exactly.
I mean, for $5 a month.
Well, it's
Yeah,
$5
until you
to
get
start.
canceled.
There's other services that Conrad can go into more detail with. It's $5 for basic, and then it goes up if you want additional services. So you really have to know what you want to have covered, and he can go over that in detail one-on-one.
Mm-hmm. It's pretty simple, but it does start at $5 a month. For multifamily, 3plexes or larger, it would be $5.60. That's always going to be true, but.
Conrad, you gotta channel your inner Steve Jobs, man. But wait, there's more. You got everybody hooked right now. Right? You gotta be like, but wait, there's more, everybody.
I mean, really, where one of the benefits is I wouldn't have to sit there and try to find a plumber who's available, who could get out there, whatever. It's like that peace of mind alone.
Right.
You know how fun that is? That's so fun. Scrolling through Google reviews and Angie's List.
Exactly.
Especially when you're out of state and you get the call from your tenant that, the soil is percolating. What?
Right.
Plant flowers, duh.
My question is, as a landlord, why don't you have those things before the problems show up? I mean, if you've got an emergency at 2 o'clock in the morning, you failed in your process and your systems if you don't already have a plumbing company that you can call.
Yeah, I went through 11. Like I've got 5 I've used several times. I got to the 11th one right now to get somebody out within 5 days. Like everyone was, and this was just get it pumped so that we can work out the problem later. Even that took 5 days. So I just did hotel rooms for tenants. And then in the end, it was something that needed water hydrojetted, whatever that means. Yeah. Okay. So I want to thank everybody for coming today. Next time we'll have a much better looking host. Unless there's
kind to yourself.
You did a great job, my friend.
Well, thank you. And I hopefully there was value for everybody, and not just for me, because this helped me out a lot. If anybody has anything else, we'll give them like a minute to bring it up. If not, we'll be wrapping this up until next week.
Cool.
Awesome. You guys have a week full of awesome.
Have a good one.
Awesome.
Thanks, everyone.